Money has new rules now. If you're still investing like it's 2015, stocks, real estate, maybe a bit of crypto, you're already behind. Because in 2025, wealth doesn't just grow in portfolios, it evolves in algorithms, carbon credits, tokenized assets, and even your digital identity. Welcome to the new rules of wealth, where technology, volatility, and innovation are rewriting everything we thought we knew about money. Let's break it down. We used to think building wealth was simple: get a job, save money, buy a home, retire comfortably. That playbook worked for decades, until the system changed faster than our mindset. Inflation, AI, climate change, de-dollarization, geopolitical tension, all reshaped how capital flows. And the old rules, buy and hold, diversify in stocks and bonds, save for retirement, don't work the same anymore, because wealth today isn't just about what you own, it's about how you adapt. And adaptation in 2025 means understanding 4 massive shifts. 1. AI-led investing. 2. Green finance and sustainability. 3. Tokenization of real-world assets. 4. Diversification for an unstable world. So, let's explore these and what they mean for your financial future. Let's start with the big one: AI-driven investing. If 2023 was the year of ChatGPT, then 2025 is the year of autonomous portfolios. We're not talking about robo-advisors anymore. Those were cute. Balanced ETFs and dollar cost averaging. AI portfolios now learn, predict, and adapt in real time. Imagine your portfolio as a self-driving car. You tell it your goals. I want to retire at 45. It monitors markets, inflation, interest rates, and even sentiment on X and Reddit. Then, it automatically reallocates, hedges, or shifts to outperform the average investor. That's not sci-fi. That's literally what firms like BlackRock, Wealthfront, and a dozen AI startups are building. BlackRock's Aladdin AI already manages over $20 trillion in assets, using machine learning to forecast risks before humans even notice, and retail investors. They're catching up through AI co-pilots that can scan your portfolio and flag inefficiencies faster than any financial advisor could. But there's a twist. As AI dominates the markets, human psychology becomes the weakest link. Algorithms don't panic. They don't FOMO buy or rage sell. We do. So in this new world, the edge isn't just data, it's discipline. Knowing when to let AI work for you. And when to say, no thanks, Hal, I got this one. Now let's talk about the other megatrend, green finance. If you think ESG investing is just a woke buzzword, you're missing the trillion-dollar wave reshaping global capital. In 2025, sustainability is no longer an option. It's policy. Governments are pouring billions into climate tech, renewable energy, and carbon markets. The EU Green Deal, the US Inflation Reduction Act, and Asia's green bond explosion. Together, they've turned environmental responsibility into financial opportunity. We're entering an era where carbon credits trade like commodities, and green ETFs outperform oil stocks. Tesla and Enphase are yesterday's stars, the next generation of wealth creators. Companies building batteries, clean hydrogen, smart grids, carbon capture, and AI systems optimizing them. But here's the real shift. Sustainability isn't philanthropy anymore. It's profitability. Because when trillions in institutional capital move toward decarbonization, the green premium becomes the green standard. And for investors, this means 2 things. 1, the future of returns will be climate-linked. 2, if your portfolio ignores ESG, it's not neutral. It's riskier. So the new wealth mindset isn't green versus growth. It's realizing that in the long run, green is growth. By the way, before we dive deeper into the fascinating part, there's a platform I think you'll find pretty interesting, and I wanted to share it with you guys. Unique OTC Exchange was built for one purpose: safe, transparent OTC trading powered by smart contracts. The results? 1B plus on-chain volume, 20 max plus is revenue, 5M plus is users, and multiple times ranked number 1 in pre-market trading, even beating major CEXs. Projects like Doodles and Pump.Fun each hit 20 Metra plus on Unique. Of course, this isn't financial advice. If you're interested, do your own research. I've left a detailed link right below. Alright, let's keep going with the next part. Now let's move into the blockchain side of the story. Tokenization. Forget meme coins for a minute. The real revolution is in tokenized real-world assets, where anything with value can exist as a digital token on the blockchain. Picture this. Your $500,000 home divided into 10,000 digital shares. Someone in Singapore could buy 1% of it. You could instantly borrow against your house or trade your shares in seconds. Without a bank, that's tokenization, and it's already happening. In 2025, major banks like JP Morgan, HSBC, and Franklin Templeton are tokenizing bonds, real estate, and even art. The World Economic Forum estimates that $16 trillion in assets could be tokenized by 2030. What does that mean? Liquidity, accessibility, global participation. Imagine being able to invest in Manhattan property or a Picasso with just $10, not through a fund, but directly on-chain. This is where blockchain stops being crypto and starts being infrastructure. But, and it's a big but, regulation will define who wins. The US SEC, in EU's MyCA and Asia's sandbox policies, are setting the stage for tokenization 2.0, the adult version of crypto, minus the chaos. So if 2017 was the Wild West, 2025 is the Wall Street of Web3, more stable, more regulated, and a lot more valuable. Let's be honest. The past few years taught us one brutal truth. No market is safe. Forever. Pandemic. War. Inflation. Supply chain meltdowns. Every safe asset, from government bonds to biggie. The tech took hits. That's why diversification isn't just stocks and bonds anymore. It's multi-dimensional, across asset classes, currencies, geographies, and even systems. The smartest investors in 2025 are building anti-fragile portfolios designed not to predict the future, but to survive it. Think of it as portfolio Darwinism. You don't know which species will dominate. So you keep exposure to multiple ecosystems. You still keep stocks as your main pillar, but spread them out. Mix in sectors like defense, AI, and energy with bonds. Stick to the shorter-term ones and make sure they're protected against inflation. For commodities, think gold. Lithium, uranium, even carbon credits. These are your real-world hedges. Then come the alternatives. Real estate, private lending, maybe even rare collectibles if you know what you're doing. Crypto? Only the useful kind. Bitcoin, Ethereum, or those new tokenized treasuries. Forget the hype coins, and don't sleep on cash. Seriously. It's boring, but when the world goes crazy, cash is power. Let's take a step back. All this talk about AI tokens and green finance is exciting, but real wealth? It's still human, and here's the irony. In an age of unlimited data, clarity is the scarcest resource. The rich in 2025 aren't just the ones with the most assets, they're the ones who stay calm. They know what to ignore. They manage risk, not emotions. They understand that freedom, not Ferraris, is the real flex, because wealth is evolving from status to sovereignty, from look at what I have to look at what I control, and that control, it's powered by knowledge. That's why financial literacy, adaptability, and a growth mindset are becoming the ultimate assets. In a world where money digitizes, wisdom compounds. Before we bring this to a close, I want to remind you about Unic has recently launched their public token sale, the Unic IDO, as part of their token generation event. The goal is to raise funds through 100,000 UN tokens, starting at $0.15 and gradually rising as supply decreases. Early participants are rewarded for joining sooner rather than later. Check out the link below to dive in if this caught your interest. Just sharing info, not advice. Always research before making decisions. So here's the question. If the rules of wealth are changing, are you? The people who thrive in 2025 aren't just investors, they're translators. Decoding signals from tech, policy, and human behavior into opportunity. Because wealth has never been more democratized or more demanding. In the old world, you needed capital. In this one, you need clarity. The next decade won't reward those who hustle the hardest, but those who adapt the fastest. So learn. Invest intentionally. Think like an owner, not a speculator. Because the future of wealth isn't about beating the system. It's about building your own. Thanks for watching. If this helped reshape how you see money, hit like, subscribe, share it with someone who's still investing like it's 2010. And remember, the new rules of wealth don't wait for anyone. See you in the next one.